Hello, welcome to European Open Briefing for Wednesday, December the 5th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we're seeing that risk appetite we saw early in the week faltering further today. The dollar index enjoying safe haven demand once again as doubts grow about whether or not the US and China will be able to agree to any sort of an agreement on improving trade relations. The dollar index recovering back towards the 97 level, dollar yen moving back towards the 113 level. We saw big losses overnight on Wall Street amid fears that the US economy is heading for a possible recession, and Asian and European indices followed suit this morning. Looking at European currencies, the euro is more or less flat against the US dollar at 1.1338. Sterling recouping some of yesterday's losses when it fell sharply after the UK government suffered three major defeats in Parliament over Brexit. Having a look at the riskier currencies, the Aussie and the Kiwi and the Loonie both lower against their US counterpart. The Aussie suffering the most by dropping 0.6% on the back of disappointing GDP numbers out of Australia. And in commodities, oil prices once again under pressure, WTI down by 1%. We saw another rise in US inventories, and of course we've got the deteriorating outlook for demand for oil given the fact that the global economy appears to be heading towards a slowdown. Having a look now at the major pairs more closely, we can see dollar index recovering to around 97, moving off a 1.5-week lows we saw earlier in the week. President Trump has threatened major tariffs against China if they don't agree to a real deal. So this has dampened expectations that the US and China will be able to agree to some sort of a deal on improving trade relations. On the Chinese side, they're a bit more confident, though, that a deal could be reached. Despite that, we're seeing risk appetite deteriorate sharply this morning. And adding to that is the partial inversion of the US yield curve. We saw yesterday the spread between 3 and 5 year yields and the 2 and 5 year yields turn negative, and the spread between 2 and 10 year treasury yields has narrowed even further, and this is usually seen as a sign that the US economy is heading towards a recession. Looking at sterling, we saw yesterday sterling briefly touching a 17-month low of 1.2657. This came after British MPs voted to find that the government was in contempt of Parliament for not publishing the full legal advice on the withdrawal agreement. So this is it's actually very rare for the government to be found in contempt of Parliament. So this was a pretty historic defeat for the government. In addition to that, we saw the MPs proposing that the UK government would have to ask MPs how to proceed should the Theresa May's Brexit deal be voted down. And although this was a defeat for the government, it was actually positive for sterling. We saw sterling rising a bit after that vote, mainly as it reduces the chances of a no-deal Brexit scenario if Parliament gets to have a say on what to do if the Brexit deal is voted down, as then they would have the power to make alternative proposals rather than the government, which was threatening either vote in favor of the deal or there's going to be no deal Brexit. And that main vote on that withdrawal agreement is on December the 11th. Ahead of that, we've got coming up very shortly the November services PMI out of the UK at 9:30 GMT. A quick look at the Australian dollar now. We can see the Aussie falling sharply from those near 4 months highs we saw early in the week. Australian GDP numbers disappointed for the third quarter. The economy expanded by just 0.3% versus expectations of 0.6%. This means the RBA will stay on hold for even longer now. So this has pressured the Aussie on top of that risk of sentiment. And looking at the Canadian dollar, the loonie is also reversing its gains from earlier in the week. It's now weakening to around 1.3280. All eyes will be on the OPEC Plus meeting on Thursday, although we are expecting a decision to cut output. The size will be very important, because if they don't agree to a significant reduction, oil prices are unlikely to stabilize. So the loonie could fall if the OPEC disappoints. But ahead of that, we've got the Bank of Canada meeting. That's their decision will be announced at 15 hours GMT. It's possible the BOC could adopt a more cautious tone given everything that's been happening since the last meeting, and mainly the weaker outlook for both oil prices and global growth. That's it for me. Thank you very much for watching, and have a great day.